Hi there, Katrina Stone here with 719 Lending. I am a mortgage loan originator, and I'm happy to tell you today about the 2-1 buy down. It is also called the rate reduction. Some people call it different things. What it is, let's just call it what it is, right? So the 2-1 buy down, what this is for you is it basically allows the seller, yes, the seller, to pay for your rate reduction. That's why they call it the rate reduction. They will pay that for you, okay? But let's talk about numbers and let's see how it works and how much monthly savings and annual savings it will provide to you. And why am I telling you this? Because you can still afford to buy a house in today's market. And today our interest rates are 7, 6, 7.5, 6.5%. That's okay. We can still afford to buy a house. All right, let's get into the numbers. Here we go. The first thing, your loan amount, let's call it $400,000. If we have $400,000 loan amount, and let's say we have to qualify you for, let's just say 6.875. So for 6.875, the first year we're actually going to lower the rate to 4.875. Your monthly payment is going to drop from $2,627, and now it's going to become $2,116. So right there off the top, you're saving a little over monthly savings of $510.88. Your yearly savings for this, if you go into this product for the first year, you're actually going to be saving $6,130. So that's a huge savings in that first year. Where is this money coming from and how can you get it? And like I said, when you buy the house, you use the seller concessions. The seller will be able to give this to you when you buy the house. All right, year number 2, because this is called a 2-1 buy down. So year number 2 has come around, and now we're going to drop it only 1 point from the 6.875, and that point is 5.875. Your now monthly payment will be $2,366, but guess what? Your monthly savings is still $261, and you're still saving $3,138. That's a lot of money you can still be saving. Now get this, year number 3 though, it does go back to the 6.875. Why does that benefit you? And you're probably kind of scared right now, and then that's okay. Don't stop the count or don't stop watching right now, because you can still refinance. This is a market that is you're able to get into a home. Don't marry the rate, marry the house. Get into the home. Let's refinance you. Because if you go through me, you buy a house from me or with me, and you then refinance it a year to 2 years later, that's okay. I'll give you a discount because you're going to go through me again. I can help you get that refinance. So that way you can lower your interest rates. These rates are not going to stay around forever. So what that means to you is, let's say that seller's going to give you the money that came up to $9,269. At closing, they will provide that to you basically for your closing costs. And at that point, you will get that rate reduction. And if you refinance in year number 1 or year number 2, that money still comes back to you, goes under your principal amount. Let's say we called it $400,000. That $5,000 or however much money you refinance from is going to go right back into the principal amount. If you have questions, concerns, please don't hesitate to reach out to me, Katrina Stone at 719-316-3443.